Well, equities are poised to end their 7-day losing streak in a big way today, boosted by those record-breaking Black Friday sales numbers with us over the weekend. Now, with us now to talk more about the markets is Jay Kaplan. He's a portfolio manager for Royce and Associates. Jay oversees $4.5 billion in assets. And Jay, great to have you with us.
Thank you.
Dominic, of course, joining as well. And I was looking through several of your holdings, Jay, and your total return and your value funds.
Right.
And retailers play quite prominently in there, including American Eagle Outfitters, which was pointed to us by one of our contributors, Jay Margolis, as a stock that could be under pressure because youth retailers are not likely to do very well this holiday season. I mean, he says their profit margins are going to be squeezed. What's the bull case for this?
Well, American Eagle has already been under a lot of pressure. The stock has. The margins have come down a lot over the past 3 to 4 years. They're less than half of what they once were. So the stock now is at a level where we think all that bad news is well baked in. The balance sheet is very strong. There's about $3 a share in cash. If you take that out, the stock sells at about 10 times earnings. There's a new CEO that's going to start in January.
The guy from Levi,
He's from
right?
Levi.
Okay.
And, you know, the heart and soul of American Eagle is denim, so he ought to be able to step right in and help that brand. And a lot of the new merchandise seems to be selling pretty well. It seems like the lines were pretty long over this weekend in American Eagle. So it's absolutely true that Eagle, Abercrombie, Aeropostale, they've all been under pressure as spending's been down, but we think it's well incorporated into the valuation, and you only need a little bit of good news to have a really good stock.
Well, you know, we were talking to Pam Quintiliano, who's an analyst over at Oppenheimer, about American Eagle. It's one of her top picks. As a fundamental investor, though, as a buy-sider, what would you like to see as a fundamental investor in the company? Management changes, product changes? What exactly what do you think gets the stock to really take off now?
Well, we have the management change coming, but we won't see really the impact of that for probably 6 or 9 months after as we get through some product cycles. But I think margin improvement, along with strong sales, as well as the redeployment of capital and stock buybacks, all that put together should make for a good stock over the next 12 to 24 months.
Let me talk about GameStop, because I know it's your top holding in your value fund, right?
It's a big holding.
Big holding. And we had Jim Chanos on last week, who has a short against GameStop. Let me just play for you his reasoning behind this.
Sure.
The internet is the most efficient distribution network ever devised, and as the cost of transmitting and storing a bit approaches zero, anybody that's in the business of selling you a physical product that is digitized has seen their margins just completely collapse over time.
Well, what do you make of that?
Well, I think that in a vacuum, what Jim has to say has some reasonableness to it, and that's kind of GameStop a year ago. GameStop has been doing a lot of things since then. They have the buy-sell-trade model, which is very successful, which others have tried to copy with no success. So
what is that?
That's a hardcore gamer can bring in their games after they play them, get store credit, use that to buy the next hot new game, because a $60 ticket is a big ticket for some folks, and that helps enable the transaction. And by the way, they do a good business in selling these used games too. They've really worked on selling digital content. They had a lot of digital sales with Call of Duty, the latest release, and that business has been growing pretty fast. A year ago, they introduced a very successful loyalty program, so they know who their customers are, what their customers buy, and they can market to them that way. They are not growing their store base anymore, which is a good thing. They're not investing in stores. I know Jim had a problem with leases. Their leases are very short, so they know where their customers live, where their customers buy, and they're working that angle pretty carefully. Their balance sheet's clean. They're buying back stock.
But doesn't he have a valid point, though, that GameStop eventually is going to be like a Blockbuster, is going to be like a Barnes & Noble, where they're going to be basically put out of business by online?
Completely disagree. They bought a company recently that helps to deliver PC games online, so they're doing that. They're in beta tests with a service that will allow their customers, after they buy a game from them, to play that game on any platform or any device. So they are absolutely in the digital business. Blockbuster had a terrible balance sheet, big stores, long leases. GameStop has a clean balance sheet, small stores, short leases, and is going digital early. Someday will it be all digital? Yes, but someday can be a really long way away.
And you expect GameStop to be part of that, then, it sounds like, on the digital side is what I'm saying.
Over time, absolutely.
Jay, thank you. Great to see you.
My pleasure. Good to see you, too.
Great to go over your stocks. Jay Kaplan of Royce and Associates.